Welcome to Cultivating Success. I'm your host, Dr. Allison Bremner. This podcast, we talk about business and mindset for healthy, happy chiropractors. In today's episode, we have Ben Atkins, owner and founder of Waterfall Bank. Today, we're going to be talking about finances, interest rates, how to get a business loan, and simple financial things that you should know. If you like this episode, we are dropping new episodes the first and third Monday of the month. And if you're listening to this and you're thinking about, man, I'd like to hire an associate, but I don't know where to start, I have a class that teaches you how to do that on teachable.com. And also, if you are a young grad and you don't know how to find a good associate position, I got a class for you as well. All right, let's get into it. We're going to have some great information for you today. Welcome, Ben.
Hi, thanks for having me.
Oh, yeah, absolutely. So Ben's a pretty funny guy. We'll see if he cracks some jokes on this podcast. You can actually cuss on this podcast. It's okay.
Really?
Yeah,
Okay.
so don't be afraid.
Maybe I'll do a swearing knock-knock joke.
Well, thanks for getting on. A lot of students that graduate school with like $250,000 in debt, and then they think they just like bring their business proposal with no collateral, and they want to borrow like $100,000 from a bank. So what do you think about that?
I think they're probably not going to have a lot of success going that avenue. But I would say when you leave school, I actually believe the first assessment a chiropractor needs to do is, or any physician, healthcare proxy of any kind, any business person really has to self-assess, are they an entrepreneur or are they an employee?
Oh, yeah. This is what we always talk about.
Absolutely. And in finance, you really see people who are successful who have chosen to be an entrepreneur and made the right choice, but you also see just as many people who maybe should have been employees and made a drastic mistake. And I think you embody somebody who understands being an entrepreneur, understands that when you take on a business, hence take on debt, take on risk, you have to really, really be willing to put that business in front of most of the priorities in your life. It has to be forefront. And a lot of people don't live their life that way. Work is an afterthought. Maybe it's a great snow day and they want to hit Vail and they want to go skiing and they're just going to cancel their patients. That's not a person that should own a business. That's a person that probably should be an employee. A business owner understands the value of that customer from the day they start their business through the entire course of their business. But yeah, so I think a new grad who steps out into the limelight and now needs to figure out how to start their practice has to first determine whether they're the right person to do that. My guess is you probably see a lot of people in your field that start a practice and then wind up becoming an employee and kind of eating the debt of the practice.
That does happen if they have a little more gas in their tank. Unfortunately, sometimes they're just done. They've got this huge student loan. They take on, some more business debt. They grind it out for, 3 to 5 years. And then they, to your point, realize, man, I should be an employee. But at that point, they're in not just the debt is one thing that you can overcome. It's the like breaking point of you just are burnt out because I thank you for saying, about me being a business person, because I actually like that part. Like that part is the fun part for me. And the thing is, it's okay if that's not the fun part for you. And we've had a lot of discussions. I've asked you a lot about different business ventures that you've had. And you've told me a lot of stories of you're got to be kind of weird.
Absolutely. I would definitely say most entrepreneurs are strange people. I always think to myself how much easier life would be if you chose a very steady profession. A lot of people look at being like a mailman as a steady profession, like the person wakes up in the morning and has the same route day after day after day. And there's consistency with that. But that comes with its own stress, right?
Well, you go
Um,
crazy though, right?
that's exactly
That would
right. You
make
go
you crazy.
postal. You go postal. There's a term for it. Um,
Uh,
yeah,
yeah.
I think to get back to your question, I think when somebody graduates from school and they recognize they have that entrepreneurial spirit and something they're passionate about and they really want, um, first and foremost, I think they have to examine the business they're about to start before they get debt, after they determine they're capable of doing this. And not all places to work are equal. I don't know too much about being a chiropractor and good locations and bad, but certainly they exist. There's certainly towns and cities that are overrun. And so the first thing they need to do is kind of probably hit the street. And it's the same thing the banker's going to look at when they go to the banker. The banker behind the scenes is going to be looking at the same stuff they should look at. They should say, okay, they're opening a practice in Boulder, let's say. How many other chiropractors are in Boulder? Then randomly call. Can I get an appointment tomorrow? If everyone says yes, you're in the wrong town. And you have to choose to be the best in that town to figure out how you're going to get that market share. And as a new graduate, you probably have a lot of things going against you. You're probably younger, which may make some people feel less comfortable, or it may make some people feel more comfortable. But essentially, you have to understand your market you're about to enter, because the banking community is definitely going to look at that, determine, is this a strong market for the business you're putting into place? And then I think you have to recognize what makes a successful office. Again, um, I think you've created a very successful office, but you know, paying $35,000 in rent a month doesn't make a successful office. So you have to watch your overhead. You have to watch where you're going into, the location, what you're paying in rent. You have to look at, is the equipment you need, do you have to spend what you have to spend to treat that patient? In some cases, you need some sort of state of the art item or software, x-ray machine, different stuff that can make a difference. And so you have to be ready to go after that. But as they go to get financing, sometimes the equipment you need, those companies can offer financing on that equipment, but you have to read what you're signing. You have to make sure you understand, paying 17% for a $20,000 piece of equipment, over 5 years, you're spending a lot of money. And can you, refinance that? Because where you are your first year is not where you're going to be your second or third. And, maybe you have a successful first year and now you're ready to take out that financing. Can you? Is there an early prepayment fee, or are you locked into that? Also, one of the other interesting things with starting a new practice, I think, and going after money for equipment is, are you buying? I don't know if this is true with being a chiropractor, but are you buying something that's outdated that now your practice is going to be? So, are there items like that people purchase and 2 years later, you're still paying 3 more years on it, but you want something different?
Yeah. Well, one thing that you said about, like, I think when you are a student, because you're so used to like pretend money. Yeah, you've been living on student loans. So you just, because they give you like one or two classes on these student loans, and they're like, sign here and we give you money. And you're like,
That's right.
great. So you're so used to just like, oh, I just sign here and I get money. And I know chiropractors. One specific example is they bought this software that was for an x-ray system. And yeah, it was like $6,000, but it was 17% interest and could not pay off early. You
Yeah.
had to make which I've never even heard of. I was like, whoa, that's a thing. But
Yeah.
because the chiropractor thinks I just need to get all this equipment so I can start doing things. And they don't ever think about, one, do I really need this? Two, read anything and understand like what an interest rate will do to you. Like, it makes your payments impossible. Like, you're paying basically 16 times the amount of like what it's
Yeah.
worth. So I think that just kind of talking about this, because I've talked to a lot of students, they get out right out of school and they don't think about it because the last 4 years of their life, they've just been signing the dotted line and getting money.
I think they
So
also have to be careful once the practice is open. I I think medical supply people will target them, show up at the door, and hey, you really need to buy this. And you know, I think one thing being a new grad is my first boss. I'll never forget. He was a older guy who was an incredible man. He was a colonel in the military, and he'd always say, Atkins, God damn it, people are no damn good. When are you gonna learn that? And he'd always shout that and yell. But I think you're so impressionable when you come out into the world that you can't imagine somebody would call you for a meeting, sit in front of you, and sell you something and scam you in a professional atmosphere. You kind
mhm.
of are used to seeing scams on the street, or a telephone scam or this type of thing, or for kids graduating today, internet scams. But literally people in nice suits will enter your office and tell you, oh, no, no, all the doctors do this and just sign here and just do this and just do that. And you can't just sign documents. And one of the biggest scams in the world are copy machines. You can literally, so back in the days of healthcare, we would take over healthcare facilities around the country, and we would, during diligence, look at their copy contracts, because a healthcare facility might have 10 copy machines. And a color copy machine can be like a 15, $20,000 item, depending on what different features, what it does, the output it has. It can also be like 5 or 7,000. But these companies can package these things with, oh, you're going to get toner and paper and this and that, and you're getting this delivered each month. But now what's happening, instead of getting your paper from Sam's, let's say, and it's $1 or whatever for a pack of paper, you're paying you know $14 or something in these toner deals that are incredible. Or the maintenance guy comes out each month and you have to pay for it to check the machine and tell the count on it, or this or that, like all this sort of stuff. So it's really kind of interesting. Talking about medical supply salesmen, we had this building in Louisiana, and we noticed all of a sudden the rental equipment went to like 28,000 a month. We're like, what the hell's going on there? And everybody's nursing staff's telling us, oh, they needed this and they needed that, and it was urgent, necessary, and of course you want to be patient focused. So you're like, oh well, if you needed it. Then all of a sudden one day I'm there, and I see like this like really good looking guy walking down the hallway, and all the nurses are like, coming up to him, and he's like the medical supply guy. And every weekend he's partying with them. And they're like, oh, are you getting the fishing boat again this weekend? He's like, oh yeah, you got to come out. And like, they didn't need half this stuff. Like, I was like,
He was just a good
yeah,
salesman.
he's sleeping with half the
Ah,
stuff. They're buying whatever he wants them to buy. So as comical as it is, even as a solo practitioner, you have people, and a lot of people, you need these people in your life, and you need the same way drug reps inform physicians about the importance of the medication and stuff. Medical equipment people are there to show you the latest and the greatest, but you just have to be a good consumer. And I think that's where experienced people like you can be leaned on. Like if you're a chiropractor entering right out of school, you should have a friend like Dr. Allison that you're talking to and saying, hey, is this the right price to pay for this? Like, don't be afraid, to call other people in your community and talk to them. And, where'd you get your copy, or how did you do this? Each of these items that you might need, don't assume, that you're getting a great deal on it.
I make all my associates take all of the sales calls to so that they have to handle them, and I'm like, they do not let them. Like, I am not here to talk. Like, I tell them, because my new associate was like, well, they asked for the owner, and I said you weren't here, and I said, just say you're the owner, and he's like, oh. Okay. They wouldn't even think about that. Um, but yeah, man, when you're a business, you are a target. Like
Yeah, no
everyone
doubt.
wants to sell you their thing. And you know what? I think that chiropractors, especially because they're so excited to like see people that they want the best for their patients. But guess what? You can always upgrade. We talk about that is one of the biggest mistakes is taking on a huge amount of debt when you first start, because usually you can buy some things used, like we're talking about tables, right? Because yes, you can get a table that will be better for you. Like the tables basically help you. Like if they, come up or down, they're automatic, but for the patient they actually don't make a huge difference. So you might as well like use stuff. Just get the most important thing is you got to create business. You can have the greatest supplies in the world, but if you don't have patients coming in the door.
And they can probably get from a school wood shop sale, like the vice. Isn't that how you guys crack people? You use one of those vices and like they use in wood shop and you kind of lock the head in there, crank
don't
it around.
Don't let Ben confuse you because he is a patient. He's a patient in my office. He gets knee, chest, upper cervical. He knows exactly what chiropractic is, but he does like to make some jokes. Yeah, I think that, well, since we're kind of on the subject of interest rates and credit, which is a very basic financial thing, but I feel like sometimes people just put their head in the sand and they don't,
Or elsewhere.
or elsewhere, somewhere they can't see. But like credit is a huge thing. I think that like I find that docs are one or the other. Either they've gotten in trouble with some credit cards, so now they're terrified of getting a credit card, or their parents are just like credit is bad. Like having a credit card is bad. And then they have a low credit rate because they don't have enough credit. And I think that it's really important to understand that having a credit card and having debt and these things, it's not necessarily bad, but it's how you manage it.
Yeah, that's really a true statement, something that's not talked about enough. But for those who are listening to your podcast that are still in school, it is really important to get a credit card and to begin building your credit. Your first car purchase, to talk about, let's say there's two types of car buyers. Let's say there's a car buyer that's financing the whole thing. And then there's a car buyer who maybe their parents are well off and they're saying, hey, we're going to give you some money to buy a car. Really, in that second scenario, you're harming yourself not having debt on that car purchase. You're probably better off taking that money and putting a lot of it towards the car, but then still financing it, because how banks will view you later on is every successful finance you have that you successfully make the payments builds your credit score. So by no means do you want to get into silly debt and go buy crazy stuff that you don't need. But if you're at Rooms to Go or Canes or Ashley's Furniture and you're shopping for a couch and they say, oh, we have no payments, and usually those no payment scams, what those are is all that interest is accruing, and if you don't pay it off by a certain date, it hits you with it. So you basically were getting interest the whole time. But you can also play games with them by financing that couch, but just making sure you have the money already set aside to pay it off before that date. And or literally you can finance and pay it off 3 months later. But that, by just doing some sort of actions where you're financing something and paying for it, it's building your credit score. And getting a credit card and using it, a little bit here and there and making sure you make a full payment each month, that's going to build your credit score. Um, those are, it's very important because people think if you've never borrowed money, you're going to have the best credit score there is. You're not. You're untested. Is that how they look at it? So if you're currently in college, back in the day, I'm sure it doesn't exist anymore. On a planet far, far away, there was a store called Sears Roebuck. So Sears used to be a place that would give out credit cards to young people, especially a lot of people, their first credit card. I don't know who it is today, but you can somehow you want to start your credit, and you want to. It's easy to search online for this stuff now. Go to waterfallbank.com. We can apply for a credit card there. But you don't want to go credit crazy, but you do want, there's a happy medium with all this stuff, like you're saying, to build your credit. And then the other thing, going back to your very first question, I think another important thing for a new grad, and you can do this as an exercise while you're in college, and they probably should have a class on this if they don't, but you should build a pro forma for what a brand new practice looks like. How many patients do you need to see to cover this? What revenue are you having? And you should do a best case scenario, worst case scenario, and then, a medium case scenario. And by doing projections like that, where you're building your revenue and patient count on Excel spreadsheet, you'll be able to understand what risk you're taking in opening a practice. What's interesting is if you don't wind up opening a practice and you take a job, you'll probably be a better employee understanding what your employer is going through, because you'll say, wow, I only saw this many patients this week and they're paying me this amount. This isn't good, you know.
Yeah, well, I do want to touch on that. And I also want to touch on, like, if we can give some people some actual numbers. One,
Sure.
what would be a good credit score to actually get approved for a business loan? And then how long are business loans financed over? Because I think a lot of students don't know that it's a lot shorter than your student loans.
Yeah. So during different times in the economy, different money is available from banks and from other people. So when you have a recession like we have now, what's happening is the economy is growing too fast for the federal government. So what that means is the Fed was seeing a few months back unemployment at near record lows, which in turn suddenly, there's a supply shortage, which makes items cost more. So essentially, what's happening in society is inflation, which means price is increasing for stuff, is going up and up and up and up, and it's going faster than people can afford to pay people. And businesses are about to hit a brick wall. They see it coming. So the federal government wants to create chaos in the economy and essentially create unemployment. And so the only tool the federal government has to do that is interest rates. So you often hear them talk about the Fed, and the Fed is essentially the Federal Reserve. And what happens is you have an interest rate that's being charged for treasuries and for the government to raise their own money. And as interest rates go up, it makes the economy slow down because businesses spend more money on borrowing money and acquiring things. So, like, if you want to build a new factory and you're going to borrow $1 million to build that factory, when interest rates are low, like a few years ago, people were building factories and borrowing money at 2.5%, 3%, very low rates. So there was a lot of growth, a lot of stuff like that happening. So when interest rates are raised and banks then are loaning money at 7, 8, 9%, businesses borrow less because the higher the interest rate goes, the more it costs the business each month to pay that debt. And the higher that rate goes, the less they're going to borrow, and it's going to slow down the economy. So, as a new grad chiropractor, people don't need that much information, but to understand, probably lost everybody and they turned off your podcast at this point. But
No, I think it's good. Like they've never even heard about thinking about interest rates. So
sure.
it's fantastic.
So what happens when interest rates are higher like now? So interest rates right now for somebody with good credit, they're borrowing anywhere between 6 and 8%. If you have bad credit, you're probably borrowing anywhere between 8 and 10%. You're paying, but if you think about what that means, if you're able to borrow at 3%, right? On $100, you're paying $3 annually. Now, if suddenly you're at 9%, you're paying $9. So, like simple math, you're paying 3 times the amount of interest against a loan. And remember, interest doesn't pay off the loan. Interest is just the juice, right? You guys remember a classic movie like Rocky and the loan sharking, and he's going around collecting money. You know, what's the juice running on the money? That interest rates is essentially that's the excess, right? That's what you're being charged for borrowing the money. You still have to pay down the loan. You still have to make principal payments. So, the interest and principal combined, when it goes up on a loan, it becomes very hard for businesses. So for new grads, one thing to understand today, if you're borrowing, is you're borrowing at one of the highest points. So now, to be clear, in the 70s, boys and girls, there used to be a president called Jimmy Carter. During this time, interest rates were 17%. There were massive lines down the block for gas. So historically, there was a time where interest was crazy. Think about paying 17% was if you had good credit, by the way. People were in the 20s, otherwise it was crazy. So right now, with interest rates being 7 compared to times like that, historically, it's not that bad. But we just went through, a decade of rates being, 2, 3, 4%. And so when you're out there borrowing today, because you're borrowing at a time when it's higher, you don't want a longer term loan that you can't get out of. You don't want a 10-year loan at 8%. And then 5 years from now, 3 years from now, the government's trying to make the economy grow faster and trying to get more employment. So what do? They lower interest rates, right? And now you're stuck in this long-term loan that's not very good. Now, the reverse is true. 3 years ago is when, if you were running a chiropractic firm, you would want to have borrowed money, locked it in for a long time at that rate. Similar to if you're buying your building and you can get an interest rate of 4%, anytime you're near the bottom, you want to borrow and you want to do that loan. And that's fixed rates don't change. So borrowing for 30 years on an adjustable rate doesn't help you. If you're borrowing at prime plus something, as rates go up, you're going to be hit with those as well. But your typical business loan, to go back to answer your question, typically they're anywhere from 2 to no more than 5 years. And the banks, do shorter terms with that because they want to see your performance and they want, that money out there not too long. And so you have to be realistic when you borrow and recognize you're going to have to refinance that. And you have to look at where you are today. So if you're ever in a loan and you have a 3-year loan, let's go in between, go at the middle ground, and you're a year and a half in your 3-year loan and rates have come down, you can go back to a bank and say, hey, I'd like to refinance this now, grab this better rate, and let's put it out another 3 years. Banks are happy to do that. So you want to be, rate shopping always, not just when you buy your original practice and your equipment. You want to always look at what's going on with that stuff.
Yeah, I think the relationship comes in. I will say, I really hate banks, and this is not false, but your bank is the only bank that I don't dread calling on the phone because your customer service is great. And it's a relationship where you're like, oh, I'm comfortable with everything that I've borrowed and we're good. But if it comes to a point of where I want to, change, and 5 years ago, I never thought about interest rates. I was just like, oh, that's just what it is. But, the more I learned about it, for example, my house is refinanced at 3%. And when people call me like, oh, you want to sell your house? I'm like, I will never sell this house ever. Ever. Because but the thing is, you could buy something where the interest rate's kind of high, but just in your mind, no. And you don't have to obsess about it, but just understand that when that time comes, because like you said, the economy goes up and down, and the way that wealthy people make money and hold on to their money is they borrow a lot of money when they can borrow a lot of money on a cheap interest rate, and they refinance any of their properties when they need to. And that's, I think, a trick right there that is unknown to middle class, poor people. It's just
Well,
plain interesting.
I'll tell you the whole thinking. One thing you learn in my elderly years, um, one of the great lessons is that most successful people do things counter to what the crowd is doing. So if everybody is out buying houses and the market's booming and it's incredible and prices are just raging and going up and up and up, and everybody's saying, I got to get into real estate, that's typically when successful people have begun to sell and they're taking advantage of a booming market. And when it's gloom and doom and there's tears and bloodshed in the streets and people are going, oh my God, there's 40 houses for sale on the street. Who would get into real estate? That's when successful people buy their house. That's when successful people go out and look for real estate. So you're always, and the truth is with professions, it's very much that way. When nobody wants to be a nurse, and nursing schools have shortages and can't hire, and they're advertising. If you see billboards for a job from a college, or colleges are pushing certain professions, that's probably the best time to get into a profession is when nobody is in it, because you're being told this is in demand and people are incentivizing the schools to try to grow these programs. And you saw that with computer programmers a long time ago. When it's not good to get into something is when everybody and their brother, everyone you run into, what are you doing? Oh, I'm becoming a computer programmer. What are you doing? I'm becoming a computer, everyone you meet. Um, there's an old fable that it's time to get out of real estate when you're getting your hair cut and the barber beautician is telling you they just bought their fifth rental property. It's
like 2007, 2008.
yeah, it's like it's something that's always existed in society is that, when everybody is in something, a crash is probably coming.
Yeah. I mean, I just think that these are great topics that aren't really talked about. Would you say that like a 760 credit rating would be considered good credit for a business loan, or do you think it should be even higher than that?
No, I think look, any sort of rating that you have in that neighborhood is going to be solid for a lot of these folks. Something that's, I think people who have good credit generally don't need to listen to a podcast about having good credit. And I think a more important thing is to talk about bad credit. So there's definitely people who are listening or people who are in school who maybe a parent opened a credit card in their name and like destroyed their credit. Maybe they made some stupid decision when they were younger. It's never too late to work on your credit and fix it.
What do
Ever,
you think?
ever, ever,
What do
ever.
you think would be like
And
the first step?
well, I think for each person it's different, but I think a true honest awakening is the first step is to sit back and look at, your credit report, not shy away from it, sit it on the dining room table and stare at it, look at it. And when you see that that Best Buy credit card with like $14,000 on it and you don't even have any of that stuff anymore and you're feeling overwhelmed, a lot of times there's actually a lot of companies that talk about fixing your credit and doing stuff like that. I'm sure many of them are scams. You have to investigate those like anything else. But to try to work with, look, if you're a credit card company or Best Buy or somebody like that with a credit card through one of these firms, nobody wants to see the person be unsuccessful. So a lot of times they're willing to work with you. So if you spend the time on the phone with these folks and trying to work out, how to fix this stuff, but also with that comes discipline. You got to stay. There's a saying, got to stop the bleeding first, you know, and, you can't keep spending. You can't keep going out of your budget. So you have to cease the spending. You have to create a budget. You have to figure out what you can afford, but then you got to start knocking off the debt. I think what's often interesting in society, you see plenty of people doing, but I don't know that college kids understand that anymore like they used to, is nothing stops you from getting a second job, especially when you're young. Like you could be a new grad chiropractor trying to start your clinic. It doesn't mean you can't work as a bartender a couple Saturdays a month and take that income and put it against, the debt you're trying to erase. Sometimes people get overwhelmed when they say, wow, this is going to take 12 years. Okay, if you graduated and you're 25, it's not the end of the world to now be 37, now be debt free. I mean, it seems like forever from now, but you're going to be glad you did it. So it's never too late to start. But I think for folks like that, trying to repair your credit is important.
I think, yeah, you're right. What's really interesting is because like chiropractors, they understand that health comes from within and you have to take responsibility for your health. But then for some reason, they don't take that same thought process for their finances because I'll tell you the hardest thing about being in business is the emotional component to it.
Oh yeah, the roller coaster.
Because I mean, right now in my business, we are bleeding money and we are trying these things that will bring in patients. It's going to be awesome. I'm really excited about it. But I had to take a bunch of money and put it into it so that the business will succeed. And to your point, guess what I'm not doing right now? Meeting you in the Cayman Islands, right? I'm not traveling. And I understand it's temporary, right? Like in business, you're gonna have some times where it's not going exactly the way you want to, and you just all of a sudden tighten the belt, take all of and don't stop spending money on your business. That's what people do, right? They're like, well, then we'll just stop the marketing. We'll just stop business. And I'm like, well, then you won't make any money,
When you bring up marketing, I find that it's always interesting. It's really important to understand when you're spending money on marketing what the results you're getting are. And I've always felt like people will advertise nonstop in certain things, but not even understand where their clients are coming from. Like there's this awkward moment when you go see Dr. Allison, she places your head on the what do you call that device? What do you call that? The bench? What is the mini one called?
If you know what upper cervical is, it's basically old school videos of BJ Palmer. And, since Ben thinks he's funny, he calls it like the chopping block.
Well, what's interesting is you'll stand on top of the desk and do like a Ric Flair Nature Boy, woo, and come flying down for the cracking. Uh,
And you pay me a
it's
lot of
great.
money for that. So
It's a great move. It's a great move, cape and all. Um, no, I feel like the advantage that you have is you're with that patient and you have time to talk. And sometimes, what do you have to talk about? People are like, how's your day? Start the conversation on that visit. So how did you hear about me? And
mhm.
don't just take that answer. Dive in a bit more. When the person says, oh, a friend told me, that's not good enough. Oh, which friend? Oh, that friend. Were they a patient? If you don't recognize the name, no, they weren't a patient, but they work in your building and they saw a flyer you put out to all the other people in the building. You got to get to the bottom of what's bringing those patients in. And when you understand what that is, you always got to make sure you keep spending money on what's working. And if something's not working, you have to understand why it's not working. So I think what's interesting in marketing and healthcare is, you may do some sort of click ads today and may have hired a firm to do that. And you didn't get anything from it. It could be you hired the wrong firm who didn't know what they were doing. So if every other person you talked to that worked, but it didn't work for you and you used a different company, maybe you need to switch. So I do think it's important to continue spending money on your business to increase your patience. The other thing I would always say that's important to say to new grads and folks out there is the number one thing for any type of healthcare patient is to examine yourself and how you work with patients and what your bedside manner is like and how you sell your practice. If you're having a lot of one and dones, you got to look into how your practice is running. And that goes for whether you're a chiropractor, a dentist, a doctor. I mean, people can have bad experiences and they'll absolutely lie to you when you call them and say, "Oh, you didn't come back. Is everything okay?" Because nobody has to have that confrontation. It's not their job to say, "Yeah, your receptionist was an asshole." It's like not their job to have that
Yeah,
confrontation.
they're not going to tell
And
you. But that
yeah,
you're absolutely right. And the thing is it's expensive to get that new patient. So to have the one
absolutely.
and dones is
Oh,
disaster
it's
because
awful.
you're
It's
just,
awful.
again, you're bleeding money and then you're not. So like I would say the thing that we're like really good at, and I'd say chiropractic in general is pretty good at it, but like our office, like when people come in, they love the office, they stay. So that's like very common. So I'm okay spending money where the patients come in because the lifetime value of that patient, is thousands and thousands of dollars. But yeah, if my associates, I'm like, what's happening here? How come they only came in once? And sometimes it's as simple as, oh, I forgot to reschedule them. Sometimes not a bad thing. It's just like that's part
Sure.
of like learning the business. But
Yeah.
well, I mean, I think we can go on and on. I do appreciate you coming on. And I do want to always bring you guys people who are experts in the field. So I don't like to bring a chiropractor and then like talk about finances. Like I know there are chiropractors that understand finances, but I want to bring on people that's what they do for a living. And like I bring on people who do SEO. You heard from Jack about him and his online stuff. So thanks for coming, Ben. And if you guys are interested in a wonderful bank, Waterfall Bank is awesome. I love working with you guys. And for you Palmer, Florida kids, they're right down there in Clearwater. So it's kind of a local bank. Well, that's really all we got for you. Thanks, Ben, for being on.
Thanks a lot.
And
Take care.
yeah, I'll see you guys.